In this video, I'm going to discuss the monthly stats for January 2024, including an overview of the total residential stats, benchmark pricing for each district in the city, as well as breaking it down per property type. So we're going to look at the detached market, semi-detached, row homes, and apartments. So feel free to skip ahead to the chapter that you are the most concerned about or that you are the most interested in. I've broke it down into chapters below. Stick around until the end of this video and I'm going to tell you who is buying all this property despite high interest rates, and also when I think we might see inventory catch up with demand here in Calgary. My name is Andrew Jones. I'm a realtor here in Calgary with CIR. Thanks for checking out this video. Let's get into it. January sales rose to 1,650 units, a significant gain over last year's levels and long-term trends. The growth was possible thanks to a rise in new listings totaling 2,137 units in January. New listings rose for homes priced above $300,000, but the largest gains occurred for homes that were priced above the $700,000 price point. The rise in new listings relative to sales did little to change the low inventory situation in the city. With 2,150 units in inventory, levels are near January record lows set in 2006 and nearly 49% below long-term average for the month. Now here's a quote from the chief economist at CREB. Supply changes have been a persistent problem since last year. This month's gain in new listings has helped provide options to potential purchasers, supporting sales growth. However, the growth in sales prevented any significant adjustments in supply, keeping conditions tight and supporting further price growth. Again, that is from the chief economist at CREB, the Calgary Real Estate Board. The months of supply in January was 1.3 months, falling over last month's and last year's levels. The persistent tightness in the market contributed to further upward pressure on home prices. No surprise there, the unadjusted benchmark price in January reached $572,000, a gain over last month and 10% higher than the levels reported last January. So let's look at the graph for the City of Calgary total sales. I will break this down by category further in the video, but this is a look at the entire city here. The red horizontal line is our 10-year running average, and the blue in the graph at the bottom here, this is making up at least half of our sales year to date. But the biggest change we're seeing right now is in the green here. This is the largest number of sales we've seen in the apartment category in a considerable amount of time. But as we look over at the City of Calgary total new listings, of course, those are down. We're seeing them up slightly over January 2023, but we're still well below levels reported going back 10 years now. This graph here is the total inventory and sales for all property types in the City of Calgary. Again, we're seeing that benchmark price has now ticked up just above $570,000. We see a downward trend towards the fall for new listings and for sales. That is typical of what we would call a healthy real estate market. But although we saw a declining number of sales, although we saw a declining number of inventory, that benchmark price kind of just flatlined and ticked along at a decent level, kind of just hovering above the $570,000 price point. But as we look at January for this year, inventory levels have not increased since December, but we are seeing sales increase considerably. And that's marked in the first larger uptick we've seen in a few months in all of Calgary. I think that this price growth is going to continue to trend upwards in the coming months due to the shortage of inventory. As we look at the graph here for months of inventory, we are seeing a steady downward trend. Of course, it's hard to ignore that one spike back in 2020. We all know what happened there, but steadily since that time, we've seen a trend of low inventory levels, and this year is no exception to that. So let's look at the detached market specifically. A boost in new listings helped support stronger sales this month. However, with a sales to new listings ratio of 77%, there was minimal change in the low inventory situation reported in the detached sector. Now, new listings rose for all homes priced above $500,000, but the largest gains occurred in the over $700,000 price point. Low inventory levels compared to sales prevented any improvement in the months of supply, which is at 1.4 months, lower than levels reported last month and last January. So that 1.4 months of inventory, basically that means if we were to remove all new buyers from the market and no new listings were to come to market at the current sales levels, it would take 1.4 months for all of the available inventory to be bought up. The exceptionally tight market conditions continue to drive further price growth. In January, the unadjusted detached price reached $702,000, nearly 1% higher than last month and nearly 13% higher than prices reported last year. Year over year, price gains ranged from a low of 10% in city center and southeast districts and all the way up to 27% gain in east district of the city. So let's look at the detached sales for 2024 compared to 2023. We are seeing that we are above the 10-year average for detached sales. That is positive, but again, that is paired with low inventory levels causing some price growth here. So if we look at the new listings, still well below where we've been on a 10-year average, but slightly higher than where we were January 2023. So the City of Calgary detached inventory and sales, if we look at the red line, that's the benchmark price. We're seeing that tick up this month. We still have that same downwards trend in the fall of 2023, moving into the Christmas season, but inventories remaining flat and sales on the uptick. That results in a rise in the benchmark price. Now we look at the months of inventory. Again, we're still seeing that steady downward decline. Although inventory levels did slightly tick up in 2022 into the early start of 2023, last year levels were quite low, and we're going to continue to see that downward trend, I think, in the detached months of inventory. So let's take a look at the semi-detached market. With 223 new listings and 131 sales, the sales to new listing ratio fell 59%, the lowest level reported since 2020, and significantly improved over the 82% average reported in 2023. The sudden shift did cause inventories to improve over the last month, but they remain well below long-term trends. The unadjusted benchmark price in January was $625,000, slightly lower than last month, but over 11% higher than last January. The monthly decline was mainly by adjustment in the higher price point districts like West Calgary and City Center. So let's look at the semi-detached sales for 2024. We're still seeing that over the last 4 years, we've kind of been at or above that 10-year average. But as we look at the new listings, we've now dipped down below that 10-year average for semi-detached. Looking at the inventory to sales, we're seeing that benchmark price pretty much from September of last year make a steady decline. We're seeing that inventory levels way up over last month, which is a positive. Although the sales are higher, we're still seeing inventory levels that are higher as well. So this is a price point or asset class that is actually sort of flatlined in price point, mainly due to availability in the last few months. Although I don't see this trend, this downward trend in semi-detached properties continuing. If we look at the months of inventory, just like every other segment of the market, downward trend since 2020 for sure. And although we saw an uptick of inventory levels towards the end of 2023, I think we're headed towards low inventory levels again in this property type. All right, let's take a look at row townhouses. Like other property types, new listings and sales rose in January over levels reported last month and last year. However, with 322 new listings and 297 sales, the sales to new listing ratio remained exceptionally high at 92%. This contributed to further reductions in inventory levels, and the month of supply once again fell below 1 month. So when we look at this inventory level in months of supply, this is if all new listings were to stop coming to market, no new buyers were to come to market, how long would it take for the inventory to be purchased? Okay, so we're looking at less than a month. That would mean as well that if you do list your property, we would expect it to sell in under 30 days. In January, the unadjusted benchmark price reached $426,000, up over last month and nearly 20% higher than reported levels of January 2023. While year-over-year prices are higher in every district, the West and City Center districts saw unadjusted benchmark prices ease slightly over December. So here we have the City of Calgary row sales, the last 3 years well over that 10-year running average, this year looking a lot like 2022. And the new listings graph here, we are seeing below the 10-year average. Although our new listings are slightly higher than they were this time last year, we're still struggling to find new listings in this asset class. So the inventory and sales of row townhouses, that benchmark price we saw steadily tick up above the $500,000 price point through 2023. And inventory levels, aside from November, where we see a huge spike in inventory versus sales, we see that the inventory levels are starting to tail off December and January. And the last green bar on this graph is the sales for January, well above new inventory. We saw that the prices, the benchmark price, kind of tailed off towards Christmas. And I think that maybe there was a slight indication there that we were going to see prices ease. But already in January this year, we're seeing them tick up again. I think it'll be only a few months before we're seeing this benchmark price at $450,000. At the end of the day, row townhomes are the more affordable options for a lot of buyers that maybe would like to find themselves in the detached market. But that benchmark price has kind of become unattainable, and we're seeing a lot of people that don't want to live in apartment style condos move into townhouses. They do have to swallow the cost of those condo fees, but in the end, it's allowing them to, maybe have the feeling of being in a detached property, but at a lower price point. That's, I think, why we're seeing the most amount of price growth in this class of property. And lastly, here is the prices of row townhouses, steadily increasing through last year, a slight dip in the median price as we were sort of moving into the holidays. But I think that that was a little bit of a blip, whether it was weather related or interest rate related. Already January 2024, we're off to a pretty hot start. And again, that benchmark price did dip slightly, but I think we're going to be at $450,000 within a few months' time, certainly by the time we hit the summer market. So let's talk about apartments and apartment style condos. They continued to see the most significant gain in sales, raising to 488 sales in January, a year-over-year increase of 54%. This was possibly thanks to the growth in new listings. However, the gain in listings did little to the supply levels. With 682 units, inventories were 40% below long-term trends. Tight market conditions continued to contribute to further price gains in January. The unadjusted benchmark price reached $324,000, nearly 1% higher than last month and 19% higher than last January. Prices rose across all districts, with the largest gain year over year occurring in the most affordable districts like the Northeast and East segments of Calgary. So the first graph that we'll pull up here is Calgary apartment sales, 2024. Boom, we are doubling that 10-year average. The last 3 years have been quite successful for sales in apartments in Calgary, but in 2024, we really did see things take off, and new listings as well. We're seeing that new listings of condos are above the 10-year average. So if you've been holding on to a condo for some time, if you maybe bought in the mid-teens, I think that we've seen enough price growth in apartments that you're probably in a place where you're now in a positive equity situation. And if you don't have a tenant in there and you're not cash flowing, maybe now would be the time to think about considering to sell. So let's look at apartment inventory and sales. That red line, that benchmark price, steady uptick, and we see the typical tail off towards the fall of new listings and sales, December being, the lowest month of sales we saw since January of 2023. But again, quickly in January of 2024, we saw the sales kick up and not a whole lot of new inventory added to the market. Steady price growth in this category. And of course, the months of inventory graph, steady decline, trending down yet again in this category. And months of supply for 2024, lower than we saw in January of 2023. City of Calgary apartment prices. The green is your average price. We saw in January that ticked up considerably. We're looking at a median and a benchmark price steadily rising through 2023. I do see this continuing. We're seeing a lot of people come to Calgary. We're seeing a lot of investors purchase properties, and typically they're going to be purchasing these apartment style condos, and we're seeing a lot of price growth because of that. If you've made it this far in the video, thank you for staying awake. If you've skipped right to this section, I'll do my best to make it worth your while for doing so. So who is buying all of this real estate, and when can we see Calgary's market cool off? Let's start with the who. Here's a chart that shows Canada's population growth year over year. This has been a historic boom in Canadian population in our post-pandemic world. And the chart is a breakdown of the population growth year over year in each province. Now, notice that Canada right there in the middle is sitting just over 3%, while Alberta is nearly 4.5% of population growth year over year. So that's the who. Now let's look at the when. And for starters, it's not anytime soon. This graph looks at housing starts dating back to 1990, and it's simply not enough to keep up with the increased population. The chart right here shows that although condo starts and rental housing has been increasing, single-family starts are failing to keep up with the demand. Until we see more housing starts across the country, and most importantly to us in Calgary, this supply problem isn't going anywhere anytime soon. This was a really long video, but I feel like it was worth it to show you the CREB stats in order for you to get a better understanding of what's happening in our market. If you enjoyed the video, please give it a like and subscribe to watch more real estate updates in the future. And if you have any questions about Calgary's market, feel free to leave them in the comments or reach out to me directly. I'm always happy to have chats with people about anything real estate related, regardless of where you are in your journey. My name is Andrew Jones with CIR Realty. Thanks for watching.